Good morning, this is Robin Bieber on the Crude SpreadTalk at 7:35 in the morning on the 1st of June. And the first chart we're going to look at and structure generally is Brent. And the chart we're looking at here is all set Brent, and it's joining in the flat price rally. Now remember, the flat price is running into some very serious resistances across the board, although slightly with the exception of Brent, which must hold the 37.24 level. Now, concentrating on all set Brent. It's gone back up and hit again the target or the previous target at minus 28. This is an important level. If it moves and closes over 28, and it's printing 26 now, it would acquire a target high at a plus 14. The stochastic is positive. The worry here is, were it to fail to hold minus 28 and then slip back to say the 5 and 8s at minus 40, 42 area, then this stochastic would likely flip negative and we'd have bearish divergence. The message here is be careful and watch this minus 28 level very carefully indeed. And if we look at a 60-minute chart on this spread, relentless up move over the last 2 to 3 days, stochastic very toppy. Not a suggestion that it's going to dump, but certainly it wouldn't be a huge surprise for it to begin to run out of steam at minus 28, but staying over there would be positive, and as I say, would take us back to plus 14 area. Now the SEPOC, not a lot different, except it's running into its CP resistance, the 61.8 at minus 29. This is the last correction point before it's unleashed to go higher, and it's very important resistance. A move and close over minus 29, which actually is the ultimate target for what we experienced on Friday, would take us up to plus 14. The high so far today is minus 29. No huge surprises there. If this were to fail here, then there's quite a big gap between it and the 5-day moving average, which comes in at minus 42, and a move and close below minus 42 would suggest a loss of momentum. Meanwhile, the stochastic is higher, but with the same caveat that were it to fail here and this turn negative, you have some bearish divergence. And the 60-minute chart looks like it's struggling when it gets to minus 29. It's turned negative, so don't be surprised by some weakness creeping in during the early part of this morning. Now moving to back end Brent, and we'll deal with the June deck. Not a bad performance, but struggling. Lots of resistance up between 230 and 225, the 8 and 13-day moving average. It's really got to move and close over 216 to have a target to 168. It's got some work to do, and this deck June is a little bit susceptible to lower numbers. The 60-minute chart here is suggesting the rally, albeit on thin volume. The rally is beginning to run out of steam. No downside at all whilst it holds the 5-day at minus 239. And the red deck is in a similar position. First of all, its 60-minute chart is suggesting it's flagging a bit and we should see lower numbers into the London morning. It really has got to move and close over minus 365 to be giving it some upside to 306. That might be a big ask for it. The stochastic is negative, so these back end spreads on Brent are beginning to look a little bit toppy. Certainly we should see a move back lower early this morning on a cooling down dip, but their stochastic is a little bit of a worry. The fact that they're not completely above the short-term moving averages, as you can see on both of them, and this is the deck June, is a worry. So now moving on to WTI, the front month. And here we have July-August. July-August, providing it stays over minus 31, the gap fill, which it's done over the last 2 days, filled this gap. If it stays over minus 31 on this July-August, it has a target to 16. If it fails at minus 31, then it's almost a dead set. It'll slip back a few cents to 38 area where the 8-day comes in. So long as it stays over the 8-day, it's okay. This stochastic is very high and therefore something of a worry, but were it to move over 31, that would be put on hold. And the 60-minute chart on this spread is beginning to look a little bit overcooked, though not giving any short-term negative signals yet. The All Sap in a similar boat, it's over the minus 33 gap fill, and whilst it's over there, it has a target to 19. However, it must stay over 33, and that might be a little bit of a big ask. It's got the 5 and 8-day moving averages between minus 41 and minus 43. So long as it's over minus 43, it's okay. Whilst it's over minus 33, it has a target higher, but staying over minus 33 may be too much for it, and I wouldn't be at all surprised to see it slide back. And also, this 60-minute chart is beginning to look a little bit overcooked. Now, moving on to the back end, WTI, the DEC June. The DEC June's okay whilst it's over minus 152, and whilst over minus 152, it has a target to minus 124, this correction point here. Staying over here may be a little bit of a problem. The 60-minute chart on the left here is certainly suggesting it's overcooked and needs to dip back, and it wouldn't surprise me to have it testing the 164 level, the 5-day moving average, during the course of the morning. Only a move and close below 164 would suggest lower to the 13-day at minus 177. Watch this 60-minute chart, though. It is, as I say, getting overcooked. The DEC Red DEC, look at the 60-minute chart. Overcook as well on the left here. It needs to move and close over minus 280 to have a target to minus 223. Minus 280, where it pretty much is trading at the moment, i.e. minus 279 actually, maybe moving over there may be a bit of a problem for it. As long as it stays over the 5-day at minus 295, it's okay, but that looks like it's set to be retested. But that view is negated if it stays over 280. That's all for today, folks. Good luck, good trading, and bon appetit.